A regional bank we recently worked with was hemorrhaging $300,000 monthly to operational inefficiencies they couldn't even see. Their executives thought they were running a tight ship until we showed them the data. By the time most banks realize what's happening, they've already lost millions to competitors who moved faster. This isn't about technology trends anymore. This is about survival. I'm your host, and this is the Advanedge Consulting Channel, where we bridge the gap between traditional banking and the fintech revolution that's reshaping our industry every single day. We work with banks and financial institutions across the country, helping them navigate digital transformation, regulatory challenges, and competitive pressures that are intensifying by the quarter. Today, we're starting a 5-part series about a problem that's quietly destroying financial institutions across America. The gap between traditional banking systems and digital-first competitors isn't just widening, it's becoming an unbridgeable chasm. While community banks and regional institutions focus on compliance and quarterly earnings, fintech companies are capturing market share with superior user experiences, faster processing times, and lower operational costs. The most dangerous part: most bank executives don't realize how severe this problem has become until it's almost too late. Here's what we're seeing across institutions we work with, and it should terrify every banking executive listening to this. A community bank in Texas came to us after losing 18% of their commercial lending volume in just 14 months. They couldn't understand why longtime business customers were suddenly taking their loans elsewhere. The answer was brutal but simple. Their loan approval process took 14 days, while their competitors were approving similar loans in 48 hours. Another institution we recently helped was spending over $2 million annually on manual processes that could be automated. Their operations team was physically printing, reviewing, and filing documents that never needed to exist in paper form. While they focused on maintaining their existing workflows, digital native competitors were processing 3 times more transactions with half the staff. But the real killer isn't operational inefficiency, it's data blindness. Most banks are sitting on gold mines of customer data, but have no way to extract actionable insights. They know their customers, account balances, and transaction histories, but they don't understand spending patterns, life events, or financial goals. Meanwhile, fintech companies are using artificial intelligence to predict customer needs before customers even recognize those needs themselves. A regional bank we worked with last year had over 40,000 checking account customers, but couldn't tell us how many were likely to need a mortgage in the next 6 months. They had all the data, they just had no way to analyze it. Their fintech competitors weren't just analyzing similar data, they were using it to proactively offer personalized financial products at exactly the right moments. This data blindness creates a cascade of competitive disadvantages that compounds over time. Without insights, banks can't personalize experiences. Without personalization, they lose customer engagement. Without engagement, they become commoditized utilities competing solely on price. The financial services landscape is being reshaped by 3 fundamental forces that most traditional institutions are dramatically underestimating. Artificial intelligence isn't just changing customer service chatbots. It's revolutionizing risk assessment, fraud detection, and operational efficiency. Blockchain technology isn't just about cryptocurrency. It's creating new possibilities for secure, instant settlements and transparent audit trails. Digital payments aren't just about convenience. They're generating massive amounts of behavioral data that smart institutions use to drive growth. Here's the reality check that every bank executive needs to hear. Artificial intelligence is already making lending decisions faster and more accurately than traditional underwriting processes. Institutions that have embraced AI-powered risk assessment are approving qualified borrowers in minutes, not days. They're identifying fraud patterns that human analysts miss. They're automating compliance checks that used to require hours of manual review. The 3 major core banking providers, Fiserv, Jack Henry, and FIS, serve approximately 70% of banks in the United States. These platforms are the foundation of most banking operations, but many institutions aren't leveraging their full capabilities. We consistently see banks using maybe 30% of their core systems functionality while paying for 100% of its cost. Core banking modernization isn't just about upgrading software. It's about reimagining how financial institutions operate. When we help institutions optimize their core banking platforms, we typically see processing speed improvements of 60 to 80% and operational cost reductions of 20 to 30% within the first year. But core banking is just the foundation. The real competitive advantages come from integrating specialized systems that accelerate specific business functions. Take lending, for example. Abrigo has become the gold standard for loan origination systems because it streamlines the entire lending workflow from application to approval. Institutions using Abrigo are making faster, smarter lending decisions while maintaining rigorous risk management standards. It's not just about speed. It's about using technology to enhance human judgment and accelerate growth. The transformation patterns we see across successful institutions follow a predictable sequence. First, they modernize their core banking infrastructure to eliminate bottlenecks and manual processes. Then, they integrate best-in-class specialized systems for critical functions like lending, payments, and customer relationship management. Finally, they layer on artificial intelligence and analytics to extract insights that drive strategic decisions. Digital payments represent the most immediate opportunity and threat for traditional banks. Payment processing generates enormous amounts of transactional data, but it's also becoming commoditized incredibly quickly. Institutions that treat payments as just a service are missing the bigger picture. Smart banks are using payment data to understand customer behavior, predict financial needs, and deliver personalized experiences that build deeper relationships. So what should you be doing right now? First, audit your current systems honestly. How long do your critical processes actually take? How much manual work could be automated? Where are you losing customers to faster, more convenient alternatives? Most bank executives dramatically underestimate how much inefficiency exists in their operations. Second, prioritize integration over replacement. You don't need to rip out your entire technology stack, but you do need systems that communicate effectively with each other. Siloed systems create friction, delays, and missed opportunities. Third, start capturing and analyzing customer data immediately. Every transaction, every interaction, every touchpoint generates insights that can drive better decisions. The institutions that are winning right now aren't necessarily the ones with the most advanced technology. They're the ones using data most effectively. At Advanedge, we help financial institutions navigate these transformations systematically. We assess existing systems, identify integration opportunities, and develop implementation roadmaps that minimize disruption while maximizing competitive advantage. Our clients typically see measurable improvements in processing speed, operational efficiency, and customer satisfaction within 90 days. But here's what really matters. The future belongs to financial institutions that embrace change rather than resist it. The banks that are thriving right now didn't wait for perfect solutions. They started moving, learning, and adapting. They invested in their people, upgraded their systems, and focused relentlessly on customer experience. The choice facing every financial institution right now isn't whether to modernize. It's whether to lead the transformation or be left behind by it. The window for gradual change is closing rapidly. The institutions that act decisively in the next 12 months will have sustainable competitive advantages. Those that hesitate will spend the next decade trying to catch up. Your competitors already know this. You don't. Yet.